Hi, everyone. Rudy Soto here. In case we've never had the chance to chat before on the phone, I want to take this opportunity to tell you that I'm the director of VIP services here at Investing Daily. One of the most common questions we get when we speak to our readers is, what makes Velocity Trader different from all the other options programs out there? And while I certainly could and generally do answer that question on my own, today I decided to get it from the horse's mouth, so to speak. So I invited world-renowned options expert Jim Fink to join me on the firing line today, so to speak. Jim, thanks for being here today.
Thanks for having me, Rudy.
My pleasure. Are you ready to get started?
Absolutely.
Awesome, Jim. So you run three exciting options trading services. We know what they are: the Inner Circle, Options for Income, and Velocity Trader. And while all three are incredible, today I'd like to focus on Velocity Trader, if you don't mind.
Not at all. I love Velocity Trader, so it'll be my pleasure.
Very good, Jim. So can you tell me how Velocity Trader works? I mean, folks know that it's options trading, but what makes it unique?
I use proprietary filters to isolate those stocks most likely to make big price moves in the short term. Velocity is my description of this quick price move. Velocity filters are a critical part of my trading methodology. Having a system based on probabilities and risk-reward calculations is important. After all, option leverage can work both ways, so that trading options can lose money just as fast as it can make money, if you don't have a time-tested system that puts the odds in your favor. It's similar to playing blackjack in the casino, where you count cards and know when the odds favor you winning a hand against the dealer versus losing. You bet big when the card deck has few face cards remaining and the odds of busting above 21 are low, and you bet much smaller or not at all if the card deck has a lot of face cards remaining and the odds of busting are high. Probabilities are everything in a successful trading system, and my velocity filters put the probability of success in my favor so that the odds of profit are much, much higher than the 50-50 odds of any random option trade. The four velocity filters can be expressed in the following formula. Stock velocity equals crossover of moving averages plus chart momentum plus options open interest maximum pain plus seasonality. Now, this formula allows me to discover stocks whose velocity is about to rapidly accelerate. And that means there's a ton of money to be made on them. You see, this simple formula uses four variables to help narrow down the entire stock market to specific trades with the power and potential to take off. Think of it like a funnel. Stock tickers pour into the top, and these four velocity filters screen them for potential profits. Now, it may sound complicated, but trust me, it's not. Options allow you to limit your capital at risk to only those portions of a stock's price movement that you want, and for only the period of time you think necessary. This provides the trader with the ability to benefit from a stock's price movement, but at a much lower cost than buying stock. Plus, I don't trade options the way other folks do.
But Jim, what do you mean?
I trade debit spreads.
Okay, well, I understand what debit spreads are. But what do you say to folks who already think that options are complicated enough? And now you're talking about something beyond just buying puts or calls.
Yes, there is yet another step you can take with options to reduce your risk even further. It is a secret that option professionals have been using for decades, but which has only recently entered the mainstream. This extremely powerful tool is known as spreading. Remember, since an option is a derivative contract, it can be sold without owning it first. By selling an option at the same time that you buy an option, you can actually help finance the cost of the purchased option and lower your cost basis further. Remember, a lower cost basis while maintaining the same profit potential increases your rate of return. Because the outperformance of spreads is limited to cases where the stock rises only modestly, option traders often characterize spreads as possessing regional leverage. Within the region of modest price appreciation, the spread can't be beat as a strategy. But individual calls will outperform in cases where the stock makes a huge price move. But isn't it better to bet on modest price moves than huge price moves? You betcha it is. Another advantage of selling a call to reduce cost is that you can often totally eliminate the time value surcharge on the long-term call option that you are long. In other words, you get all of the upside of stock ownership, up to the strike price of the sold call, that is, at a fraction of the cost of stock and without suffering any time value decay, which is the best of both worlds. In other words, options provide tremendous leverage that speeds up profit generation, and faster profits equal velocity.
And correct me if I'm wrong, and I may be wrong here, but you can make money whether a stock's value goes up or down, or regardless of what the market does. Is that correct?
You are right. As long as you get the direction right, and it only needs to move a small amount to generate significant upside.
Now, Jim, since spreads are different than just buying regular options contracts, do you need a separate brokerage account to trade what you're recommending?
They don't need a separate account, but spread trading does require a higher trading level authorization. That's not hard to get, though. Brokers have different option trading levels ranging from simple covered calls on the low end to selling naked index calls on the high end. The trading level required for option spreads is somewhere in the middle. The information you must submit to the broker to obtain an option spread trading authorization falls into one of four different categories. Number one, investment objectives. Number two, trading strategies. Number three, trading experience. And number four, personal finances, such as net worth, annual income, and source of income. Your chances of being approved by the broker increase if you say that your investment objective is speculation. You specifically mention option spreads as one of the trading strategies you are planning to use. You have trading experience already with options. And lastly, you say your net worth is a decent level with a sustainable source of annual income. If you don't have adequate experience trading options already, you should consider paper trading. Several of the trading platforms, including TD Ameritrade's Thinkorswim and Interactive Brokers, allow you to do paper trades as a way to practice options trading using fake money. Paper trading is a great way to increase your trading experience and confidence so that you can reapply for a higher trading level than you were initially granted by the broker. For more details on how to upgrade your option trading level, you can go to the Velocity Trader website, which has both a written article and a video tutorial on how you should set up your option trading account and be ready to make your first option spread trade.
And once you are approved, you can make these trades in, say, 5 minutes?
Sure. I mean, it's only one extra step from executing a regular option trade. Having said that, it's not a race. You don't make more money for doing it faster. So I encourage everyone to take their time and make sure everything is entered correctly.
Okay, great. So that brings us to performance. Jim, what's your win rate?
The last time it was officially calculated, it was over 96% wins. But it's actually a little better than that now.
How so?
Well, that was at the beginning of April, and I haven't closed a losing trade between then and now. But I have had a few more winners.
That's incredible. Come on, what's your secret?
It's really not much of a secret. Everything hinges on my velocity profit multiplier. I designed it to pinpoint trades with the highest probability of becoming a winner. Plus, I have an ace up my sleeve because in the event a trade goes against me, I added a small twist to my strategy, which allows me to extend the trade until it becomes profitable.
So you're kicking the can down the road, so to speak?
It's called rolling a trade, but the idea is the same.
Jim, I've got to ask. What's the downside to rolling? Is there one?
The downside is since rolling a trade is effectively closing the existing trade and opening a new trade on the same stock, it costs money to perform the roll, which means you have more money tied up in the trade.
So what if I were following your recommendations and I don't want to do the roll?
Simple. You let the trade expire.
Which costs you what? Whatever you paid to get into the trade?
Yep. It's really a matter of personal preference. Since debit spreads allow you to get positioned for a fraction of what you'd pay to open a regular options trade, some subscribers will take the small loss and move on. And others are comfortable with the idea of investing a little more capital for the opportunity to make more profit. It's a personal decision, one that I can't make for anyone other than myself. But for the governing strategy I operate Velocity Trader under is that I'll roll any trade that's in danger of closing out in the red, as long as I believe it has a shot at turning a profit down the road.
So Jim, really, how much money do folks really need to get started?
Again, that's not a question I can answer, as everyone's personal situation is different. But what I can tell you is that at bare minimum, under no circumstances should anyone risk more than they can afford to walk away from. Because while I haven't closed a loser in years, there may come a time when I do.
Right, but can you give us an idea of how many winners you close out, say, every year?
Sure, I closed out 100 winners in 2017, 92 in 2018, 106 in 2019, 91 in 2020, 84 last year, and 13 as of April 1st of this year, and 602 winners in total since I started Velocity Trader in 2015.
So really, this isn't some flavor of the day type of service.
Far from it. It's a time-tested program, and I think my track record speaks for itself.
But what do you say to folks who want to learn more about options investing in general before they come on board?
Well, that's understandable, Rudy. In fact, I encourage it. My goal today wasn't to sell anyone on anything. It was to answer questions from people who are on the fence and wanted to learn more about my program. So I hope I've done that. I will say this, though. There is a way to trade along with me at Velocity Trader without risking a dime of your own money on the trades.
And what's that exactly? Is that what they call paper trading?
Right. I mean, now you can do it online. The Thinkorswim trading platform from Ameritrade is the best in my opinion, and it's free to download. Honestly, there's no better way to find out exactly how easy it is to follow my trades and track their performance than this.
That's true, Jim. At the same time, I know there's folks out there who still want to know more than what we've covered here today, or are concerned. Velocity Trader comes with a big price tag. So with your permission, I'd like to take it from here.
It's all yours, Rudy.
Okay, folks, as Director of VIP Services, I can tell you without a doubt that while the questions I fired at Jim today were the most common ones we get about Velocity Trader, I'm well aware you may have others. And that's where my team and I come in. We're standing by right now. All you need to do is give us a call at 866-833-2070. When you do, you can ask us anything that doesn't involve your personal investment situation, including how to get into Velocity Trader for a fraction of what we normally charge. Just don't delay. We're only here till around 6 p.m. tonight. And if too many people pile in over the next few hours, I can't guarantee we'll be able to take any new members tomorrow. Remember, the number to call us is 866-833-2070. Well, Jim, with that, is there anything else you'd like to add?
Just that I appreciate everyone who tuned in today. It's been fun. And thanks for taking the time to put this together, Rudy.
My pleasure. Thanks for your time. And just in case you missed it before, the number to get in on this remains the same. We can get your questions answered. Dial 866-833-2070. Plus, if you're interested, I've even worked up an exclusive deal to become a Velocity Trader member, one you won't find anywhere else, not even online. Consider it a thank you for taking time out of your day to join us. Remember, the number is 866-833-2070. I look forward to speaking with you.